Trade with clarity.
Price turns, and you immediately mark a swing low. A few candles later, price falls back through it, so you delete the label. Then another turn appears, and you do it again. By the end of the session, your chart has been rewritten more times than a bad movie script. The problem isn't that price keeps producing confirmed swings. The problem is that you're confirming them before price has proved they matter. A turning point is easy to see. A turning point that deserves structural weight is a different story.
In real time, price gives you candidates first. A candidate is simply a place where the market may be turning. That's useful information, but it isn't a finished conclusion. Confirmation comes later, after price shows enough follow-through to make that turn structurally useful. That timing matters. Hindsight makes every important high and low look obvious. Live charts don't arrive with circles already drawn around the correct answer. Your job is to separate what might matter from what price has actually validated.
Here's the mistake. Traders treat reaction as confirmation. Price bounces from a low, so they crown it a swing. Price rejects from a high, so they assume the turn is complete. But markets react everywhere. They pause, probe, reject, and revisit the same area. A reaction only tells you that price responded. It doesn't tell you whether the response will develop into something structurally meaningful. Before you upgrade a turn, ask whether price created real follow-through or simply made a temporary move inside the same mess.
Look at this chart. Price forms a visible low and pushes upward. At first glance, that low looks important, but the next candles drift back into the same area. Nothing has been settled. Now compare it with this example. Price turns, moves away, and the chart begins to build a different shape. The exact confirmation process belongs inside the full course. The public lesson is simpler. Don't confuse movement with commitment. A brief bounce creates excitement. Sustained follow-through creates stronger evidence.
One of the clearest clues comes from how price behaves around a level. A wick can show a fast test, rejection, or probe. It can be useful, but it can also disappear as quickly as it appeared. A candle close gives you different information. It shows where price finished that period, not merely where it visited. That still doesn't guarantee what happens next. Nothing does. But when you're evaluating evidence, a brief poke and a sustained hold shouldn't carry the same weight. Excitement is loud. Commitment usually leaves a cleaner footprint. Confirmation also protects you from chop. In overlapping conditions, price can produce endless local highs and lows. Every one looks important for about 30 seconds. Then, the next candle erases it. If you promote every local turn into structure, your chart becomes unstable and your directional read changes constantly. Sometimes the correct label is still candidate. Sometimes the honest answer is unclear. That isn't hesitation on your part. It's discipline. You're refusing to give structural authority to a turn the market hasn't earned. During the session, this high begins as a candidate. Then, price starts moving away from it. A few candles later, the evidence develops enough to confirm that the high mattered structurally. But notice what happens next. Price later consolidates and pushes higher again. So the lesson is not that the first turn was meaningless. The lesson is that a confirmed swing is not the same thing as a full trend reversal. Equal highs and equal lows create another trap. Traders see a double top or double bottom and immediately call it a confirmed swing or guaranteed reversal. But repeated highs and lows often represent areas of attention first. Price may revisit them, probe through them, or remain trapped around them. The shape alone doesn't settle the structural question. Treat the area as important, yes, just don't give it a job it hasn't earned. A familiar pattern is still only information until price shows what develops after it. So how should your chart look?
Start with fewer declarations. Mark obvious possibilities lightly. Upgrade only the turns that prove useful to the larger structure. Leave weak reactions alone. Leave overlap unresolved. And stop treating every wick like a signed confession from the market. The goal isn't to catch the exact candle where a swing begins. The goal is to build a chart read that stays consistent as new information arrives. You're not paid for labeling first. You're rewarded for reading clearly. A pivot is where the question begins. Confirmation is where the market starts answering it. That distinction keeps your chart clean, your structure stable, and your opinions on a shorter leash. The next time price turns, don't rush to crown the high or low. Ask what the market has actually proved so far. Inside the Wolf Den, we turn that idea into a repeatable process using precise definitions, chart rules, and guided reps. Subscribe to Arctic Wolf Trading and join the Wolf Den when you're ready to stop guessing which turns actually matter.